So you've heard from a couple of the mining companies, and now we're going to go into our next keynote speaker, Mr. Richard Morrow. He is a director of Lowell Resources Funds Management, but he's also the chairman of the Melbourne Mining Club. Now, I've known Richard for a number of years. He is very well versed in this sector. He understands the gold sector. He also understands about investing. And I've asked Richard, I've given him a big task today, how not to get burned in the gold rush, because many of you out there are listening to great Aunt Meggie and saying, oh, I'll just put my hard-earned cash into something, when really you need to do your own research. And welcome to the virtual gold conference, Mr. Richard Morrow.
Well, thank you very much, Kerry. It's great to be here. Yes, well, what a topic you've given me. I was hoping you'd give me something, easier, like how to solve the Middle East peace process, But oh dear, but it's a very, very cyclical business, the gold and the mining industry. But look, before we get started, though, I wanted to make the point that today's discussion is not financial advice, just my opinions. I might mention a stock or two that might be held by the fund or me personally. So before investing, please, talk to professional. Don't ask Aunt Minnie. Get professional advice before you invest your hard-earned cash in this cyclical sector.
I think, Richard, that is very, very good advice. And this whole day is about helping to educate people, but it is not advising them to necessarily put their money into anything that we're suggesting today. It is purely, this is your opportunity to understand what's going on, but then to go out and do your own research and talk to people like Richard and listen to Richard.
That's very, very kind. Yeah, look, I live by, and I've been doing this for 30 years now, I live by the rules. There's three very, very important things before considering an investment in a mining company, and that's people, projects, and finance. People is probably the most important one. I think, Kerry, you'd agree with this. There are some people out there that are just absolutely the best people you've ever come across in the world, and they've got very, very good track records. So do your research. Look at who the directors are. Look at who the geologists are. Have they been associated with previous successful exploration or development works? And just make sure that they are top quality people, and they will not let you down. Projects are very, very important. You can't learn too much about the project that's involved. I mean, say it's an ore body. Is it how deep is it? How easy is it to exploit? What is the metallurgy like? How do you get the gold or the copper or the uranium out of the ore? Sometimes it's not easy and can really cause a few problems later down the track. And finance, how well financed these companies are. A bit of a trend that's come up recently is that companies that have got projects are looking to buy into cash flow producing assets, because most of the exploration in Australia over the years has been funded out of pure equity. You get a placement or a rights issue, and once that money is invested and that's spent, you have to go back there again and ask your shareholders to pony up one more time. It's sort of like a magic number, which I think is about $1 million. Companies have to report into the ASX at least their cash position at the end of every quarter. And once you get below $1 million of cash, you tend to get into an ugly zone where companies are then forced to raise capital, and that can weigh on the share price. So probably one of the key things is to look at these exploration and mining company quarterly reports and check out how much cash they've got.
I think that's a very good one. Would you tend to steer away from anybody that had a very low cash balance? I mean, would that be something there you go, that's a cross against that one, regardless of how good the people in the projects are?
yes, it's a starting point, and that's where you go. But then again, that might be also creating opportunity, because sometimes the market gets sold down and share prices get sold down because the cash balance is low, and then lo and behold, the capital is raised by either placement or a rights issue, or a new venture, joint venture party coming in, and that can solve the problem, and suddenly bang, off you go. And it's a nice mix, but you really can't go past the people. I mean, I'm thinking of some of the most successful people in the Australian gold mining sector, for example. You look at the two best domestic companies here. They're Northern Star, for example, and Saracen. Look at the people behind those companies. Look at Bill Beam at Northern Star. You know, I got him to speak at the Melbourne Mining Club in December 2014, and I marked that day as the bottom of the market for Australian gold shares. You know, Bill got up there and spoke to about 800 people about what is driving him and his processes. And here's a guy who was a long-term mining contractor, knew what he was doing, acquired this gold mine called Porcelains, and the associated listed shell, and then leveraged that to buy into different mines that were being sold by these American owners who really had no interest in being in Australia any longer. People. He knew the assets, he knew what he was doing, he knew the pathway, and now today Northern Star's an $11 billion company. Back then as a tiddler. And then look at Saracen.
Richard, I want to ask you, because I think that's a really good point, but there's lots of companies listed on the ASX. What was it about? I mean, you've mentioned that Bill understood assets, etc., but there's other people that understand assets. What was it that got Northern Star to where it is? Because it is, you know, and I'm a shareholder of Northern Star, and you know, I will stick long term, because it's a strong business, and it's pushing out cash very, very nicely. But I do remember Bill coming to speak at the our gold conference. I think it was back in 2012. Goodness me, I wish I'd invested then. But probably then I didn't understand, and probably then I wasn't chatting to you. But what was it that got him to create this extraordinary company?
He backed himself, and he had a really good team about him. He had good people behind him, and he backed himself, and people started to back him. And of course, the gold price way back then was about 1,100 US, say 1,400 Aussie. Today we're talking 1,800 plus, and about 2,200 Aussie. So you know that it's amazing what an extra $1,000 an ounce will do for you. But right person, right time, smart enough and gutsy enough to back himself. Plus, he had the technical knowledge from being a very successful mining contractor, and he'd actually worked in some of the mines that he'd acquired. You know, I remember going to Kundana, more than 20 years ago now, and looking, gee, this is a great mine. You know, it was owned by someone else at the time, and lo and behold, Bill's got in there with Northern Star team, and they've really, you know, they've taken layers and layers of cost out that can only happen to a mine when it's part of a massive multinational, and you've got HR departments, you've got departments for this and that. You streamline all that, back your people, and having a nice 6 to 8 gram ore body doesn't hurt either. You know, very close to Kalgoorlie.
Absolutely. And for those of you that haven't heard of Northern Star, because I know there's a lot of people on the conference today that are new to this sector, most recently Northern Star has merged with Saracen, which was another very strong company, to make something even stronger. And the background to that is they both joint ventured into the super pit in Kalgoorlie, and now it's one owner. What are your thoughts on that merger?
I think it's brilliant. It was a marriage made in heaven. You know, Riley Finlayson at Saracen did again another great operator, graduate of the School of Mines in Kalgoorlie. You know, put this thing together. Started with a clapped out old mine at Carosue Dam. that's been owned by a few people before it, and really turned that into a strong cash flow producing operation. Then took the courageous decision to buy half of the super pit, and now it makes it marriage made in heaven, bringing together those two companies who basically own half of the same magnificent asset. They've got an amazing challenge ahead of them. How do you revitalise and get the best out of an asset that's been around forever, like the super pit? I think they'll get there, and they're going to create a world-class gold company based in Western Australia. Fantastic work.
Yeah, it's been interesting, hasn't it? Now, as we're talking here towards the end of November, 26th of November, the gold price has had a bit of a pullback, and people are getting a bit nervous. You've been around these markets for a long time, and right at the start there, you said, Kerry, it's cyclical. What would you say to those people that because it's psychology as well, isn't it, Richard? So I'd love to hear your views on, the topic is how not to get burned in the gold rush. The gold rush has kind of pulled back a little bit. What are your thoughts on that?
Well, nothing goes up or down in a straight line, and I look at the fundamentals behind the driving forces behind the gold price, and I think of gold as being money. It's another monetary asset. It's a metal for sure, but it's actually money. You can swap gold into money, at the click of a fingers. And if you look at what central banks and governments are doing with money supply around the world, there's so much money being created out of fresh air. Now, you can't create gold out of fresh air. Print as much money as you like, but gold production around the world only grows at about 2% per annum if it's growing at all. And the gold, the relative price of gold to all this money being created out of fresh air, I think will lift the gold price higher. What we're seeing at the moment is just a typical correction in the market, a bit of a pause. It's interesting that one of the other alternatives to fiat currency, which are the cryptocurrencies, have been going through the roof lately. So perhaps some money is flowing out of gold into the cryptocurrencies like Bitcoin. Bitcoin's up something like 80% in the last few months. And again, though, these are another alternative store of wealth to printed currencies. And then you look at debt. I mean, there's some numbers going around that that I've seen today suggesting that the global debt is growing like something like 17 trillion US dollars just this year alone. And if you think about that's like 6 or 7 times the size of the Australian economy. I mean, in money created out of nowhere, and that will cause people to look for alternative stores of value, and gold really sticks out like a sore thumb. Yeah, it's a little bit weak at the moment, but there's also a few things happening in the very important COMEX market in America in the futures, where the December contract is being rolled forward into February. And that also creates a little bit of negativity at the moment, and also plain old simple profit taking. There's nothing better for a trader than to take a profit, and we're seeing a bit of that going on at the moment.
Do you think that this is a good time? I often say to people, it is a little bit about psychology, but you wouldn't walk past a storefront where it said 50% off and keep walking. You go, oh, that looks interesting. I personally, and this is not financial advice, ladies and gentlemen, do not do anything without talking to people that understand your personal finances. But I look at it and say to myself, well, it's almost like a little bit of a sale.
Well, that's certainly the way it's been described by many of the people that I follow, and actually that leads into a very interesting idea. Is how do you get as an investor? How do you get to learn more about the metal price, the metal markets, the drivers there, and also about the shares? And the key thing, and you mentioned it just a minute ago, was research. Do your own research. And there's so many fascinating places to visit and to see, that you can learn more about gold. And these fantastic podcasts that are going up at the moment. I mean, I really hang out for my Saturday morning fix of a podcast by Eric Sprott. Now, Eric Sprott, you know very well, Kerry. I first heard Eric Sprott speak actually at one of your marvellous symposium events many, many years ago, when they were putting together Kirkland Lake in Australia, and they bought the fantastic Fosterville gold mine up there just near Bendigo. You know, guys like these have breathed, eaten, lived the gold market for decades, and they're prepared to sort of talk about their experiences and their understandings and how things like the futures markets work. And it's all available on podcasts. The internet is full of marvelous sites where you can learn things like Kitco.com, things like miningnews.com out of Perth. Fantastic services, and there's people who summarise the announcements of to the Australian Stock Exchange that are really, really worthwhile doing. Look, I'm a bit disappointed that the Australian media that doesn't cover the mining sector nearly well enough, given how important mining is and exploration to the Australian economy. And but then again, it is what it is, and there are some fantastic services out there that give you that, and you can't read enough. I mean, an important investor once told me, 70% of his work was all about reading and absorbing and weighing up one opinion against another, because you just don't want one opinion on things. You want a multitude, and be like the sponge, take in as much as you can, and try and avoid stock tippers. Do your own work, find out things, and if you get the opportunity, I mean, events such as this. I mean, the COVID has done something wonderful for us. I mean, in the old days, you could only attend these conferences. These days, they're available on the screen in front of you, and there's some just a wealth of knowledge, and people are prepared to chat about it.
Yeah, and I'm going to throw in one there as well, the Golden Alternative Investments show on YouTube. Don't forget that one. Lots of great information there.
Well, I'm subscribed to your YouTube channel, Kerry, and I think you get an amazing number of guests on there who you just can't get enough knowledge from people who've had decades of experience in the field.
And I say this to people when people often ask me things, Richard, like, oh, what should I do and how should I do it and all that sort of stuff. And I'm saying, well, stop watching Netflix and start listening to, as you said, Eric Sprott's podcast. Kitco.com. Kitco have got fabulous stuff, and also Stansbury Research with the wonderful Daniela Cambone. Extraordinary. But as you say, you've got to do your work. You've got to do your research. Don't expect to throw some money somewhere and expect a return on it at the same time, because that's not going to happen. I want to just briefly touch, if I could, I introduced you as a director of Lowell Resources Funds Management. Could you just help our viewers today understand, what does Lowell Resources Funds Management do? And is that a way for, I'm not going to say the lazy people, but maybe the people that don't have time to do their own research, is that a way that they could potentially get access to exposure to this sector?
Yes, look, the Lowell Resources manages the Lowell Resources Fund, which is a listed investment trust on the ASX. It's a $40 million company that focuses on the smaller end, the exploration end of the market, and we sort of harness our network of people and the industry contacts, our geological knowledge, to come together to invest mainly in that exploration field, which is not for the faint-hearted. And we had some tremendous successes. A company called De Grey Mining, which, this is a company that's been around for since 2002, nearly 18 years. It's sort of an overnight success. After 18 years, it went up 2,000% so far this year, which is tremendous. And again, you think about it, people, who's behind it? Ed Issues, one of the best known explorers in Australia, is consulting to it. The board is full of very well-known and successful investors like Bruce Pankart, who's been around forever. So again, it ticks that box. People, projects, finance. The other day they raised $100 million to further develop this Hemi project they've got over there in the South Pilbara. I love the way these things come together sometimes to really tick those boxes in terms of people, projects, and finance. I'm sorry to keep going on about it, but it's just so important.
It is very, very important. So if people want to, they just go to the ASX, and Lowell Resources Fund it mainly looks at the smaller, I guess the higher risk, isn't it? How do you work out the risk factor for some of these smaller companies?
Well, you reduce your risk by doing the work, and our manager there, John Ford, is a geologist, knows his stuff, a banker, a financier in his time. There's a lot of grey hair around, as you can tell, but there. ASX codes LRT, and you are right. It's a way of smaller investors diversifying their risk by gaining exposure to probably the most exciting area. Technology people hate me now, but having that exposure to a high-risk area run by experienced investment professionals that diversifies. We've got 60 investments in this trust, and it gives us that diversity and spread across both companies and the different commodities, from gold through to base metals, through to battery metals, and even things like helium. Would you believe? I mean, secret to not getting too much risk is to diversify your risk while at the same time having that exposure to a very exciting end of the market.
Now, Richard, right at the start, you said that you've been invested or in this market for a few decades. Let's just put it that way. What changes have you seen? Is it technology that has enabled more people to understand it and I guess to uncover more gold? And as you said before, the mainstream media does not cover resources. I think it should do, because everything in Australia, our economy is mined or grown. There's a lot of people that live in cities that have never been to a mine site, that don't really understand mining. What are the changes that you've seen, and how can people, I guess, best benefit in these changing markets?
Well, there's two big changes. The first is in technology and the use of technology in exploration. In the old days, the explorers would wander around Australia and try and check out, what rocks were poking out of the ground and guess what was down below. These days we have satellites that take special photographs of geology, and we have technologies that put electric currents through the ground and tell us what's at different depths. We have seismic, which sends vibrations through the earth and through bounce backs, and we're seeing some great strides, especially in that seismics in Victoria, with a company like Staveley Minerals, which has identified quite a exciting copper project and target. The use of seismic. We have the Geological Survey of Victoria that's done a seismic line right across Victoria and it's unveiled some new thinking of what the rocks are doing down there. And so what all that does is it instead of sort of guessing, it takes away the need to drill. Probably only have to drill 30% as much, or you get 3 times more bang for your exploration drilling dollar, because you already got a fair idea of what's down there. You just have to hit it. So technology is big in exploration, And the other thing is, I think miners are becoming more and more cognizant, and they recognise about the communities in which they live and operate. So there's a lot more effort being put into just working with local communities and asking them, listen, do you mind us exploring over here? We'll do this. And if in the event of us finding something there, we don't need to dig a big hole. We can, if it's deep enough and the economics are good enough, we can access it by underground means. And there are many, many ways in which the mining industry is changing on a daily basis, almost, to make it a much more acceptable part of community. And it's a vital part. I mean, imagine what Australian balance sheet and our economy would look like if we didn't have the resource sector, pumping up. As you're saying, I mean, everything we export is either dug up or grown. And but we've got to understand, we work in with the rest of the Australian community and with the environment, and that's certainly something that's front of mind these days with the big and small miners and explorers.
Richard, you mentioned a moment ago that you're based down there in Victoria. I didn't say that at the beginning. Well, I did say chairman of the Melbourne Mining Club, but maybe, ladies and gentlemen, that was a bit of a giveaway. But it's changed a lot, hasn't it? And I know that you're a big supporter of the Victorian gold mining industry. There's been a big change. If we go back even 10 years ago, people were basically saying, oh, the Victorian goldfields, it's all over. And then I think it was probably only about 5 to 7 years ago, things started to change. And now it's, tell me about what you've seen over the last decade, because it's been a big change and a big shift in thinking and a big shift in the way people are exploring, looking, discovering, and creating companies down there in Victoria.
Yes, Kerry, there's an old saying in exploration and in mining that the best place to find gold is in the shadow of an old head frame. And that's what's happening in Victoria. I mean, you look at our best mine, our flagship that's at Fosterville. I mean, they started mining there in 1890, but it's only in the last sort of 5 or 6 years that they've hit the mother lode, mining 1 ounce, 2 ounces of gold per ton. It's and that's triggered a big exploration boom in Victoria. There's something like $200 million of equity capital being raised just in the last 12 months to explore in Victoria. You could have bought the entire gold industry in Victoria for 200 mil. A few years ago, and using these new technologies and taking a risk. These companies are out there, and there's again another old saying in resources is the more you drill, the more you find, and it's a bit of a numbers game. So we now have about nearly 30 listed companies, both here and in Canada and in the UK. That are actively exploring in Victoria. Very hard to get drill rigs at the moment. Very hard to get space in assay labs at the moment. What a problem to have! It's fantastic, and the explorers are really coming up with the numbers. And there's a lot of the success also of Kirkland Lake at Fosterville has triggered a lot of North American interest into the Victorian sector. So a lot of that 200 mil, it's actually coming out of North America and finding its way here now that they've got off the latest fad of Bitcoin and cannabis stocks in North America. They've rediscovered the both their own mining sector and Victoria. So.
Later today, we are going to be hearing from one of your Victorian companies, NOV Minerals, who are doing great things down there and using technology to create shareholder value.
It's a very, very interesting story in Navarre, and I must confess to being a shareholder. And they've really turned around, literally turned around their exploration thinking, and we'll know the fruits of that over the coming 6 months. Okay. again, that's another truism of the exploration sector, is that there's many a good discovery or project that's been ruined by drilling it. So that's another one of these little sayings we have.
Yeah, and that's a whole next half an hour, I can tell you right now, because there's a lot in that as well. Richard, before we finish up, we've got a couple of minutes left. The title of this talk was How Not to Get Burned in the Gold Rush. There's people on this call that will, obviously there's a lot of people that understand the sector, but I know from looking at who's registered, we've got over 1,000 people. There's a number of them that do not understand the sector at all. What would you say in the final couple of minutes is your best advice? You said, listen, get educated, podcasts, reading kitco.com and miningnews.net. What's your final piece of advice to the people who are trying to understand how to grow and protect their wealth?
Well, I think it's very important to occasionally take some money off the table and put it aside. Don't be scared of taking a profit. Don't be scared of leaving something for the next investor. If you sell something and it goes up a bit, don't be worried about that. Don't also be scared about occasionally, if you don't like what you're hearing about a company, you don't like the price action in the market, don't be scared about selling it and exiting and going into something else. It is a cyclical business. It is a cyclical sector. Buy and hold is not the most attractive idea. But it's volatile. So that's why you've got to stay on top of it. You've got to do your reading, you've got to check your markets. Just stay on top, and you cannot over-educate yourself in the area in which you're investing or speculating. You actually, let's get it up front. It's speculating, and you can't be over-educated.
You can lose some, you can win some, but you've got to keep educated, as we are today. Richard Morrow, Director, Lowell Resources Funds, Chairman, Melbourne Mining Club. Thanks so much for joining us on the Virtual Gold Conference.
Thank you, Kira. It's a pleasure to talk to you again. Thank you.